Hello guys, this is Felipe from the Noob Trader, and in today's videos what I'm going to be doing is just quickly giving my thoughts a couple hours before the CPI data that's going to come out and just give my thoughts on what I'm kind of expecting, what I'm kind of looking for, and how this potentially could affect the gold market. Um, I've been on holiday still, and unfortunately I also got sick, so that's why my voice is a little screwed up, still a bit sick. And that's why I also haven't been able to do any videos. But hopefully this video will be interesting and some guys will find it useful. Okay, so as we all know, the CPI data is due to come out in I think about 3 hours, if I'm not mistaken. I'm in the UK right now, so I believe it's 3 hours. And I think this is one of the most, just based on kind of general market sentiment, what I'm seeing in the media and all those different kinds of things. Um, I think this is probably one of the more anticipated CPI data reports in, the last few months, just because I think from uh, from a narrative standpoint, I think there seems to slowly be a real change happening as well in terms of what the Fed has been saying. So the Fed for the longest of time, right, as we've discussed on this channel before, has been saying that a lot of the inflation that's coming out with the really high inflation is purely transitory due to the pandemic, right? That because of the pandemic and the supply chain issues that the world is facing and all these different types of things, that we're consequently seeing a higher inflation. Um, but we've always known kind of on this channel, and if you just read between the lines in general, I mean, it doesn't take a genius to realize that that was obviously a bullshit narrative. It's not true. Okay, it's just not reality. And uh, the longest of the time, the Fed was maintaining this narrative, transitory, transitory, transitory inflation. How many times do we hear Powell talk about transitory inflation in his press conferences? Well, finally, it really seems like the Fed is slowly starting to shift this narrative, saying, hey, oh, wait, maybe this isn't transitory. No shit, dude. But anyway, so they're starting to kind of admit this more. And so because of this, I think it makes this CPI report really, really interesting. Because when the Fed was saying that everything is transitory, right? And then we're still seeing this high inflation data report. What was happening is that, you know, the inflation data was really high, right? But because the Fed was saying it was transitory, it just basically told investors, it told traders that they're not going to do anything about it. They're not going to raise interest rates as a result of high CPI or high inflation. Whether you view that from a core CPI basis or a year-on-year CPI basis, whatever it may be, um, when they were saying that's transitory, they basically were kind of giving an excuse to not do anything about it. Okay, if you raise interest rates, of course, if the Fed was actually serious about doing something at the time and they raised interest rates, obviously that's very, very negative for many different markets, not just the gold market, but also stocks and all these different types of things. But now that the narrative has kind of been changing, or very slowly changing from the Fed, it's it's definitely significantly harder to kind of judge what could happen as a result of the CPI data that comes out today. So if we look at the actual economic calendar for today on investing.com, you guys should always use this if you're trading gold. The core CPI, the forecast today is actually, let's go here specifically. Yeah, the forecast is, the previous was 0.9%, so extremely, extremely high. And the forecast, they're actually predicting 0.2% lower, okay? While just on the year-on-year standpoint, okay, for core CPI, um, we're looking at, an actual increase by 0.3%, okay? Also, if we just look at the CPI year-on-year, which is also very important to look at, okay? um, we can see just how crazy the actual inflation issue is right now, or 6.8%, 6.8%, right? So pretty clear at this point that it's not transitory, definitely not transitory. Anyway, but the point is that um, for the last few inflation reports, um, we've always been hitting over the forecast, right? And then just given the fact that the Fed has been doing jack shit, okay, gold has typically, okay, after all the short-term volatility that happens from taking profits, okay, remember guys, it's not just about the initial couple of hours afterwards, right? Um, because there you really need to understand the technicals a bit more too, and where people are going to be taking profits, etc., or where people are going to be entering into new positions. But once you take out the couple of hours of volatility, typically the price of gold after these CPI reports has gone upwards, okay? But now with the Fed saying that they may not, that they're probably taking this a little more seriously than just taking it as transitory inflation, it's hard to really say how the market's going to react if we, again, overhit these types of forecasts. If we hit if let's say we actually hit 7% here, which is kind of that big even number, it's like, oh shit, 7% inflation now. That's ridiculously high. Okay. Oh shit, maybe if this we actually end up hitting 1% or over 1% for the core CPI. I mean, we haven't seen that in literally years. Years. Okay. Same with the year on year. If we're hitting the CPI, core CPI over 5% for year on year, that's crazy. Okay, that's crazy inflation. Okay, and especially with also all the uncertainty going on, then you have with Omicron now, this new fucking variant, and this inflation. How is the Fed really going to react? It's much harder to say now that they're also taking this more seriously. Um, Ultimately, though, I still, you know, although I'm less certain about this than previous CPI reports where I just really thought, okay, we're going to overhit, and as a result, we're going to, gold is probably going to go up, right? Because the Fed's just going to kind of dismiss it like it's nothing. Although I'm less certain about that, I still think that ultimately we have to look at the last few months and just realize that the reality is that the Fed still doesn't really want to, there's not much that they can do in terms of tackling this high inflation, okay? With all the stuff going on with the Omicron variant, with the reality still of supply chain shortages, with um, how overvalued the stock market is now. With all of these different things, the Fed is put in a very precarious position. They can't just still, like the reality still is that they can't just go and raise interest rates really, really quickly because it would just lead to so much chaos economically for the United States. Okay, so we have to remember that. So just given that, I still think that if we see a CPI report that kind of meets expectations, right, meets forecasts or hits over it, I still think that, in the slightly longer term of like the next few days or whatever, that should be more positive for the gold market. Okay, but let's not forget that the Fed has been changing their tune on the inflation issue. Okay, so that's one thing to seriously remember. From a technical standpoint, if we're also looking just at the daily or the weekly charts, right, on the gold, in the gold market, we can see that we're also really closely approaching the 750 range, which has been very strong, support and resistance throughout the last few months. Um, so we're kind of at also a lower point in the gold market here. Like I've said for the longest of time, 1750 and below is just a great price for gold in my opinion currently. It's the risk to reward ratio is quite high. So I think in that sense, we also have to remember that people are probably going to be looking to get into positions around here. So in terms of that short-term volatility, um, depending, of course, on how the CPI data comes out, um, we could see, hopefully what we could see if we're a gold bull is that we kind of make that 1750 range a kind of new higher low, right? Because we had a low here, then we had a higher low here. It would be really good to see if we can make this a higher low and then kind of continue trend back upwards, right? And then maybe work towards 1800 and those kind of price ranges again. If we also look at the dollar overall, this resistance range that we drew up before has been proving to be quite strong. But of course, just given the fact that maybe some dollar investors, are viewing the inflation news positively for the dollar, right? Because if inflation's high, then people are investing in the dollar may be saying that, oh, okay, wait, um, the Fed is going to raise interest rates, if you really believe that, and if that's what dollar investors are kind of looking at, you could say that we could probably easily break through this resistance range here. We're kind of forming that classic wedge here. If we look at this on the daily chart, you get the idea, something like that. So obviously the market here, the bulls and the bears are battling. But we have to remember again that we're quite high still on the DXY. We're still quite high on the DXY. So, just given also those natural market dynamics, I think that I think from a technical standpoint as well, it's going to it would I wouldn't be super bullish on the dollar right now, just given where we are in terms of price, and I also wouldn't be super bearish on gold, just given where we are, okay? But again, we could also, for whatever reason, see an inflation report that kind of hits well below, and then who knows what's going to happen, right? We could also see the market really reacting to what the Fed's been saying now. So if we see a high inflation report, it just kind of incentivizes the market to go full in on the dollar because they really do expect Powell to do something much more drastic in terms of interest rates. So it's very hard to kind of tell at the moment for this particular report. Of course, ultimately, you have to make your own decision, do your own research. I wouldn't personally try and trade this CPI report just because this one is I feel like it's a little bit more like, oh, I don't know how the market's going to swing, but that's totally up to you guys, okay? Anyways, guys, I've rambled on long enough. If you found this video interesting or useful, please consider giving it a thumbs up. Leave a comment and I'll definitely try and answer it, and I'll see you in the next video. Take care.